Thanks, everybody. Once again, I'm Eric Almassy. I'm the Field VP for National General's individual product line. I'm really happy to be with you today. I'm planning today to talk about our senior portfolio. We have three primary senior products that we're going to dive into with some detail. That's our Medicare Supplement product. We also have a dental, vision, and hearing product that is available in Utah, and a senior indemnity plan, which is designed both for people with Medicare Advantage plans looking to gap some of the exposure associated with those types of products, and also those that aren't yet eligible for Medicare. Perhaps they're waiting for their 40 quarters to be satisfied. Perhaps they've missed their enrollment period. And this is an option for somebody where you would normally have to say no, you can now say yes. So that's where we'll be focusing. I also want to touch lightly on some of the under 65 details, because they can be relevant to people who focus on the senior space. I'm assuming that everybody on the call today is focusing on senior, and we're going to be focusing our efforts today there. But there is a bit of crossover, so I wanted to touch on that. So if you have questions, please let us know. If Doug or Bob, if somebody has a question, I can't see the fields from here, so we can stop anytime and we can dig a little bit deeper. Hopefully I have the answers for you. So let's take a look at some of the this is what we're going to talk about today. We'll go over the portfolio. I'll give you a brief overview of that, and then I'm going to dig into some of the senior products. We won't talk about packaging today. That's more relevant to, we'll touch on it a little bit, but really the focus is going to be on some of the benefits of these products, some of the whys. Why would you offer this product? What's the selling story? I always like to offer some insight with what I learned from the other agents that are out there actively in the market that I work with every day. They all have great ideas, and they have some success stories that they tend to share with me. So I'll do my best to pass those along as they come up today. So just to give you a high level view of what we offer, a lot of you working in the senior space will have people where one of the members of the family is eligible for Medicare, but yet there are still something called trailing spouses. Potentially they're a few years away from Medicare and they don't have coverage options. So our short-term medical is a really good option for a lot of the trailing spouses. We offer durations up to 3 years. So people who are age 62 could buy a short-term medical plan with us, and it can take them all the way to Medicare. We have different ways you can write this product, but we have rate guarantees and all other sorts of features with national networks, so people can get covered, have predictable premiums, and get themselves all the way to Medicare, where you can help them as you would your other senior products. So that's out there. We can talk to you about that if you have questions. We've also got a limited medical plan for those under 65, which can be used as an alternative to short-term medical or a supplement to short-term medical, again, with the purpose of getting your clients to Medicare age. Both of those have good network options. Both of them are national. And both of them would work for your clients that spend part of their year in, say, Utah, and the other part of their year in California or some other state. They can still use both of these plans if they're traveling. So we do have under 65 solutions for your trailing spouses. Another one of our under 65 products is an accident plan that can be kept into your senior years. So a lot of people are worried about accidents, healthy people especially. So if you're talking Medicare Supplement, typically you have a healthier client who's looking at that. So potentially an accident plan, if they buy it before they're 65, could be kept beyond, and it can offer real value for people that are hikers or skiers, which I'm sure you'll come across in Utah. So just know that that's out there. If you have somebody looking for additional accident coverage, we have a really good and affordable product. They just have to buy it by the time they're 65, but it can be kept and is renewable to age 75. We've got a few other products here. We've got a critical illness product. Same thing. You have to buy it by 64, but you can keep the term life piece until they're 75. Some people like to have that. The cancer, heart, stroke does not really relate in that regard, so I'll move past it. We've got a term life only product out there. We're going to also be having a final expense product available in the coming, we're starting to introduce it this summer. I don't think Utah is going to be on the first release, but it will be out there. We think by next year. So for those of you that write final expense for your senior clients, there will be an option. But in the meantime, if somebody were to look for just a simple term policy, you could buy that before age 65 and keep it beyond 65 if you'd like to. So that's an option. And then here are the products we'll be talking about today. The Med Sup. We do not have Med Advantage, so it's just Medicare Supplement with National General. We're going to talk about some of the opportunities, the pricing. I'll show you some pricing out there too. And then we have a whole bunch of new discounts coming later on this summer that I think will be very intriguing. I'd like to set the table for now. So we'll dive into that. The dental vision and hearing product is a very flexible, really robust product for your senior clients. They just have to be age 55 or older to purchase this. We have no waiting periods on this product, and we have coverage for dentures and implants on our DVH. So we'll dive in and get into some detail. And then the last product we're going to talk about is this boutique senior indemnity plan, which, again, I like to think of this as a product that fills in a gap where you always traditionally would have to say no to somebody. Now you can start to say yes with this fixed indemnity plan. It's a limited medical plan with a fixed schedule of benefits, and it has all sorts of benefits, which we'll cover. It's available in Utah, and you can actually sell this now for those 55 and older. It used to be 65. We lowered it 10 years, so you can offer this to your underage clients or those pre-Medicare clients. Potentially, if you have a trailing spouse situation, both spouses would be able to be on a product like this if they were looking for additional coverage. So we'll get into those details. So here's some of the highlights. Our MedSup in many markets is very competitively priced, and I'll just tell you right now, we're not the most competitive in Utah today, but we are going to be ahead of open enrollment this year when we have our new charter. We're going to, as many of you know, we've been purchased by Allstate. So National General is an Allstate company. And we have the ability now to, with this new charter that we're going to be releasing at the end of this summer, is going to offer many discounts, many different ways to get the premium to where it can be, different risk classes, which we'll go into. We've got no waiting period on our Medicare supplement, and any doctor who takes Medicare can use our MedSup. So you've got a wide footprint. You can use it. You can sell this plan nationwide virtually. And again, it's a standardized product. So if you sell MedSup, you know what it is, but we're going to be much more competitive for certain demographics. And I'll dive into that a bit. Here are the plans that we currently offer for MedSup. We've got plans A, F, high F, G, and N. There is talk about a high G. It's not available yet, but I suspect we will have that either later, probably going to be coming next year with the high G. I don't think we're going to have it yet this year, but we are working on putting that together. But that's the current portfolio that you see on your screen now. We have a standard rate and a preferred rate. The definition of preferred, and this is currently in Utah, and just to be clear, I'm talking with a focus on Utah. I'm sure many of you sell outside of Utah. So some of these discounts are already in place. Like for Arizona, for example, we have all these new discounts I was mentioning a moment ago, and in many other states. But in Utah, we're still with just the preferred rate. And what we ask is a smoking question, and then we ask about build. If they can fall within a certain weight range and a height range, there's going to be a 10% discount over the standard rate, being able to say no to those two questions, or to be able to qualify through those two questions. Down the road, we're going to have an additional rate class, which we call Preferred Select. And this, I think, is a really interesting differentiator with us. The only real difference between Preferred and Preferred Select is the recommendation or the usage of depression medications. So if you can ask your client if they take depression medications and they say no, and they can qualify by saying they don't smoke, and they can fall within the Preferred Select weight guidelines, it's a little bit tighter than Preferred. Then they get an additional discount, and depending on the age of the person, it can be significant. It goes as high as 20% below Preferred. So you can get 20% off the standard rate when you can get Preferred Select, and that's what's coming down the road for Utah and is already in place for some other states, which I'm very excited about for Utah. I think it's going to be game changing.
Eric,
do that. Yes.
Can you elaborate a little bit on that? I mean, from an actuarial perspective, how does the depression medication, how does that affect things? I'm just curious.
Well, it's funny because, I mean, I don't think this has much, it's not directly tied to COVID, this decision, but the depression medications actuarially are drivers of cost and utilization. So if people aren't currently taking those meds and we can get them on our plan before they start doing that, they can qualify for that lowest risk class. And even if they start taking those medications later on, their risk class would remain the same. So even though the rate increases come along, like any attained age type product, at least it's locked in at the lowest risk class. But to answer your question, it's a driver of utilization and a driver of cost. That's one of our, at least that's how our underwriters are looking at it, and it's the only real check we have for the preferred select. I mean, it's the others are not as much of a factor. So I think there's a wide window here of people who might qualify. And it's also very easy as agents to remember that depression medication is the one question you have to ask. And aside from the smoking and the weight. But that's the reason. And I think that, again, it's about opportunity here, and people want to get on a product that's going to treat them well over the long term. We're not looking to, we're not a short-term play. This Medicare is not a short-term play for us. This is something we're looking at long-term. And we're trying to keep longer-term costs down by having this lower risk class at the time the person buys the plan. I will say, though, we are looking for underwritten business as a carrier. So you'll see us be most competitive for underwritten business, not the turning 65 business, although there are exceptions to that. So just keep that in mind. That is where we're focusing right now. That our pricing model reflects that.
Thank you.
Sure thing. Some other discounts that will be available but are not yet. We're going to have an activity tracker discount for those willing to wear devices like Fitbits or Apple Watches. There's an additional 5% discount for activating that technology after purchasing the plan. All they have to do is activate it, and that 5% discount remains with them for the duration that they keep the plan. And this annual billing option is going to be really big too, I believe. A lot of people would love to get a discount for paying annually, and we offer 10% less. But this isn't available in Utah yet. I have to say it again. I wish it were, but it will be soon. You'll get 10% off of your rate when you pay annually instead of monthly for your MedSup policy. Currently, we have household discount in Utah, and our definition of household, also known as roommate discount, is the client who's applying for our plan needs only live with one person, not more than 3, but one other person is at least 50 years or older. So I think that's most of the people that you're going to be talking to looking to buy Medicare Supplement. If they're married, chances are their spouse is within that range, and the client applying will get a 7% discount even if the other member does not buy a plan. So it's simply by living with somebody who's 50 or older, they'll get 7% off the premium regardless of their risk class. So we bake that in just for that one variable. So coming soon, though, we will have a dual household discount, which is 10% for both applying members. And of course, the only difference between the two is instead of one person buying the plan, both people in the household buy the plan with us.
So Eric,
amount to 10%. Yes.
Can you elaborate that? I'm a little surprised that you offer a discount just for someone's living with somebody else. I assume that they're better. I mean, they're not going to be as sick. I guess that's what this is saying.
I guess that's what they're saying. Yeah. The I guess people who are married take care of each other and work together as a team, and overall health is better. That's the way I've always understood it.
Do you know anybody? Do you know any other carrier that's offering anything like this?
There are other carriers that offer it. I know Mutual of Omaha has one like this, and maybe another few carriers are starting to introduce it. I forget who they are offhand, but there are some out there that offer it. But we've been doing this for a couple of years now, and we're doubling down on it with this dual household, giving 10 instead of 7%, and that would be 10% for each person's application too, once that's available. Yeah.
So that's the 10%. So you get one or the other. You don't get 10 plus the 7.
Correct. You would get one or the other.
Right. Okay.
That's right. But each person would get 10 in the dual situation.
Right.
They would each get 10 off their premium. Right. I just want to give you a quick snapshot of our footprint. We're in virtually every state right now, and still filing for some of the gray states as well. So you'll see we're really competitive in the Southeast right now. If any of you writes down there, take a look at Georgia, Florida, especially Georgia, South Carolina as well. They're in Kentucky. I know that we're really, really competitive. Missouri, we've always been very competitive as well. There are certain markets where we're really selling big, and those are the ones right now. But once this new charter comes out, I think we're going to be really competitive across the board for the right client. We give a 12-month rate guarantee from the initial effective date, and then it's an attained age product. So then we re-rate based on medical inflation at renewal time. And here are the rates. I wanted to show you both the rates with and without the household discount. So these are rates for plans F, G, and N. And to prove my, I guess to show my point here, the 65 is what we would call the T65. Those turning 65, those are those rates. And then the senior or the 72-year-olds, that seems to be a threshold year because a lot of carriers pay 6 years level commission. So you're right around that time, clients tend to shop around because of rates going up every year for 6 years. And then, of course, if they're still healthy, underwritten businesses get what we're looking for in this world. So the Plan F, I point out because, people who weren't 65 years old before 2020 or before 2020, they can't buy this plan, but still anybody who was 65 or older at that time, as of that time, can buy it. And because we're a newer carrier, our block of Plan F is actually healthier than the average carrier. I think what a lot of agents have figured out is that people would move to G if they were healthy enough to do that. Whereas with Plan F, with a lot of blocks of business, they'd be stuck there because of their health. But in our world, because we're newer, we don't have the same, that hasn't been happening yet for our block because we're a newer carrier. We haven't had people on this Plan F for years and years. It's only several years. So our block is healthier and therefore the rates have been more stable. So it's for the people who just don't want to pay anything out of pocket, the Plan F might make sense for them, and it is available. And I would argue it's a healthier block for the reason I mentioned. So just keep that in mind. So these are the rates before household discount. And I can, again, the slide deck I'll put up on the resources page, but here's the rates with the household discount so you can get a sense of what it would be with preferred or standard with and without the household discount. Now, let's get into the DVH product here. We have 3 different plan levels. Marketing sat down and thought long and hard, what do we call these 3 levels? And, after hours and hours of deliberation, we came back with level 1, 2, and 3, which is perfect because it's very easy to line them up side by side. It's, obviously leanest all the way up to richest. All of our plans have hearing savings. So the hearing portion of the dental vision hearing is a discount plan. And the primary applicant has to be age 55 at least. You can sell it to somebody up to age 99. And we do allow children to be on the plan as dependents, but we do not allow child only for this particular dental plan. We do have other dental plans that allow child only, but not the dental vision and hearing. So one of the nice features of this is we do not have a waiting period on any category, not on major, not on basic. And we give benefits day one. We do grade or reduce the benefits for the first 12 months. And then starting the second year, you get the full benefit for all different categories. But if somebody wanted to buy a plan today and use it tomorrow, they would be able to do it with our DVH plan. All 3 levels have the option to add vision riders. They're optional vision riders. So you can add level 1 or level 2 of vision. Basic pricing, it's about $10 for level 1, $20 for level 2 on an individual basis. And then it sort of scales from there. But I'll get into some of the details on what those cover. And we have the network we're using for this is an Aetna Dental Administrators Network, which is pretty much the same network we use for one of our short-term medical plans. So we've got a good relationship with Aetna, and they are the TPA and the administrator and the network that we use for the DVH plan. We use Avisis as our vision network and Amplifon as our health, our hearing network for the discounts on hearing. This plan has annually increasing max benefits. So you get the max benefits starting in year 2. So we call this double up dental. You get year 1 benefits, and then starting in year 2, you can get benefits annually as high as $3,000, depending on the level you choose. And as I mentioned, denture and implant coverage is available on our DVH plan. So we have it's a pretty traditional product if you take a look at it. It's got a $50 deductible annually for an individual and a $150 in-network deductible as a family. And that's for all levels 1, 2, and 3. And in every case, preventive is covered 100% in-network. So preventive services, there's no out-of-pocket for the member. And you can take a look at day one, the basic services here. There's day one and then year 2 and beyond. So you can see starting the first day you buy this plan, you have a lower percentage of basic services, and the same will apply for major when I show that screen. So ideally, a person would want to buy this plan before they really needed major services because they'd get a lot more for it. But again, if they needed to use it ahead of time, they could. And the way we pay we do have in and out of network coverage. The network is pretty solid. If there are dentists that you don't see in this network that you'd like to have in the network, there is a link where we can actually invite them to apply and accept this. What we find is a lot of dentists will take an Aetna network plan, and they're not necessarily registered with all the Aetna plans because they have about 50 of them. And if you want us to get them in there, a lot of dentists are willing to join and accept the in-network rates. So if you have anyone like that, you can shoot me an email and we can get you what you need. Major services are covered on the top 2 tiers. And you can see that the benefits are much better starting in year 2, but they get 25% benefit the first year. The same applies for dentures. And then on implants, we do have coverage for that only on level 3. So the top level plan has the implant coverage, and it goes against the annual maximum of the plan. If someone's in the middle of a root canal, we won't cover that root canal. But if it's a new service, if they haven't started it and they want to start it the first day they buy the plan, they're able to do it. There's no waiting period on majors. So they just get the 25% benefit instead of the 50% if they waited until year 2.
Okay.
Mm-hmm. The network is pretty strong. It's a lot of providers, great discounts, and it's a true PPO network, which means you can use this in or out of network. If the providers are willing to bill for you, that's better. Sometimes they're not. If they're not, we can send you a claim form to file it. But most times it's all done electronically and seamlessly. Just show your ID card and the provider takes care of the rest. The hearing plan is, again, it's a discount, not an insurance product on the Amplifon piece, but the discounts are significant. Good 64% average savings off of MSRP for hearing aids. There are benefits for follow-up care, free batteries, and warranties for loss and damage are available as well with through this network of this discount network. All these links for you to search to see who's participating are going to be on the agent resources page. But we use Amplifon as our network. It's got a strong national network footprint. It's got some other features there with some money back guarantees if you're not satisfied, but it does come with the plan. You're not paying extra for it. It's baked into the base rate. Whereas on the vision component, that's an add-on where you can choose to add or not. So looking at the vision benefits here, again, I mentioned levels 1 and 2. The main difference between the benefit levels of vision are going to be how frequently you can get exams and frames. So if you buy level 1, well, the frames and contacts really, they work the same way. So you can get new frames every 2 years if you buy level 1, and you can get frames every year and lenses if you choose level 2. So it's about twice the premium, and you can use it twice as frequently. So it's pretty logical the way it's priced and laid out. So it's really a question of how often you want new frames and lenses. And the same is true with contact lenses. You can do one or the other. So you can get contact lenses once every 2 years if you buy level 1, or once every year if you do level 2. The network is the Avisus network, which is the biggest network for retail optometrists. So people who go get their glasses and their lenses at Costco, Sam's Club, Walmart, Target. The Avisus network is part of that. So it's not as big as VSP in terms of individual optometrists, but when you're talking about retailers, this is the biggest network there is. So we would encourage people to use those. The Costco piece is a really big deal too. A lot of people like to get their glasses at Costco. Really good pricing there. So good network for the vision. And additionally, for the DVH, we allow preferred rates if they can answer one question. So in your application, when you run a quote for DVH, we'll ask, has this client had a crown, root canal, dentures, or implants within the last 12 months? And if they can say no to that, we give them an additional 10% off the dental premium. So just by not having had anything done, we're going to give them that discount. And additionally, if they sell the dental, vision, hearing with any other product, so namely, if they're, let's say they're going to sell somebody wants to buy Med Sup and a dental plan, not only would they get the 10% for preferred, they get an additional 10% for having multiple products in the shopping cart for a total of 20%. So there are ways to really get this premium down simply by selling it with something else or with the preferred rates. So here's some sample DVH rates. We break it into sort of a group census style, the individual plus spouse, individual and children, and then the entire family. And these rates for dental are issue age. So what's nice there is if somebody's 64 and they buy a plan for, whatever rate, $37.31, they would be able at that point to keep that $37.31 rate even after they turn 65. So we break it into those two categories. And these rates do not include preferred. These are without preferred rates. So just take 10% off of all these rates if somebody were to qualify for preferred. Any comments or thoughts on these rates?
No written comments.
Oh, okay. Well, we can talk offline if you have anything to comment about this, but these are where we are today. All right, so let's talk in senior indemnity. This is a boutique product. I consider this something that isn't as common out there in the marketplace. It's a fixed indemnity plan for seniors, and there are two different styles of plans. We have 5 benefit levels, but there's base and then there's max plans. The base plans are going to be very, very inexpensive, starting at $35, and they're designed to gap the exposure of a Medicare Advantage plan. So this is for somebody who buys an MA plan and they still are worried they might have some out of pocket, but obviously if you buy MA, your premium is 0 or very low. So this could be a good fit for somebody who's price conscious, but also wants a little bit of extra coverage and didn't want to pay for the full Medicare supplement. We've got surgical benefits like any limited medical plan, and office visits, urgent care, lab visits, hospitalization. And there's a 90-day waiting period for preventive, but no waiting period for sickness or injury. And we've got a good footprint here, including Utah. There's a need for this sort of product because people fall through the cracks, and there are some people that just don't qualify for Medicare. They're waiting to become eligible. They're working their 40 quarters. They're not there yet. A lot of people, just fall between the cracks. This is something that this will fill in the gap for somebody who just didn't qualify for a traditional plan, and they had to wait longer, and maybe they missed their enrollment period. There's a need out there to protect people against unforeseen, and this is one way to do it. It's a very simple product, a lot of different options in terms of premium, and it'll help your clients who can't buy anything else. The nice thing about it is it has set dollar amounts for different services, so you know exactly what it's going to pay. It doesn't have deductibles, doesn't have copays. It's going to pay a fixed amount depending on the services that you render, that the client uses. And there's no network with this plan either, so you can use it anywhere. This plan can be used nationwide with any provider, and the scheduled benefit will pay either to the provider or to the member, whichever they prefer. And it does pay in excess of any other charges. So this is an important point. So if a person has this product, and I'll show you what these benefits are in a second here, but if they have a daily hospital benefit through this and they don't have an out of pocket, we would still pay the full hospital benefit. So the client can at times have more money than they're owing to their provider, so they can use that extra money for other things, other related costs or costs that are not related to their health care. They can use it for travel. They can use it for out of network things. They can use it for anything they want. They can use it for fun if they want to. But these benefits are fixed, and they will go directly to the client or to the provider, however they'd like to do it. I already talked about that. So let me just get to the slides here of the, here's a little bit more detail about who you'd look for. So the base plans, again, are for the Medicare Advantage clients, and then those are the max plans for people who missed their enrollment window. Maybe they're not eligible for Medicare. Mentioned that already. So here's some some benefit grids here. I'll leave these up for a second. So you can see here the hospital benefits, inpatient. There's a different benefit, different categories for sickness and injury. And you can see the plan 3 is the richest of all those plans. And the base plans, again, are for the Medicare Advantage. That's the Medicare Advantage gap plan. That's what I would call those. Does anybody have a situation? Does anyone come across this problem where they have people that are not eligible for Medicare and there's nothing else you can write them? I'm just curious if there's anybody if this is a big problem for anybody that you encounter. There's not a lot of supply of these types of products, and when you see the pricing, you'll realize there's a plan that most people can afford and get some benefit. And because it doesn't coordinate, it can be in conjunction with anything else they happen to hold or anything else they might find. Now here's this. Now surgeries are broken into categories. We have a tier 1 and tier 2 surgery. Some of those examples are in the fine print there below, but basically they're major and less severe surgeries. That's how they're broken out. And it's a flat fee per surgery, and you get 5 a year with max plans. And we don't have any benefits of this on the base plan because presumably that person would have an MA plan that would have coverage for that. Here's some outpatient benefits, and these are not copays. These are flat dollars that we would pay for office visits. They could use, each time they go to the doctor. Preventive visits, you can see those. There's a preventive visit once a year, and urgent care visits as well on all the plans.
Huh.
And then we have got some testing and radiology benefits as well on all the plans. Ground and air ambulance benefit and ER benefits over there on the base levels. The air ambulance is interesting. It's a pretty high. I mean, air ambulance is ridiculously expensive, but it's certainly something if they were to get benefit paid right to them or to the provider. There's that $5,000 benefit and a $500 benefit for ground ambulance. So here are the prices. These are the max plans. This is again for somebody who doesn't have any insurance. They can't buy short term because they're over 65 potentially, or they can't get on Medicare because they're not yet eligible, or they missed their enrollment period. You could almost sell this like a short term senior plan. If they needed to wait 6 months until they can get enrolled in Medicare, they could keep this up to that point, or they could keep it after they get on Medicare too, if they like the premium, depending on the levels that they have. But it's designed to kind of replace, be something for, if they can't find anything else, this would be a product you could put them in. So these are the rates. These are generic rates. I don't think they're specific to Utah. I don't have those, but actually now I show here that it's issue age 65 to 69. We just, as of a couple weeks, like maybe a week and a half, 2 weeks ago, opened this up to 55 to 69. So I believe those rates are the same if they're 55, but I'm not 100% sure on that. I almost positive they are what you see on the screen here. But we just opened this up a little bit bigger. So maybe some of your trailing spouses could be on this as well. That way they can get a better rate rather than buying it on their own. And here are the base rates. So this is what we would consider the Medicare Advantage gap plan. And you can see rates are very low. Might fit the right client. There's somebody out there that has a Medicare Advantage plan. They're a little worried about, well, what can I expect to pay out of pocket? And I'm a big fan of indemnity plans when they're used as supplements. I mean, some people sell them and that's all they sell people, certainly on the under 65 side. Without catastrophic protection, it's a little risky, but when you're using this as a supplement, this is for a lot of people, it's a no-brainer. I mean, it's so affordable. And there's just benefits that are going to pay cash, and you know exactly what it's going to pay, and there's no network restriction. So hopefully there's the wheels are churning, and there are a couple people you can think of that might like this type of product. It's a pass-fail underwriting. There are a set of medical questions which you can find on the agent resources page, but it's very similar to our under 65 indemnity questions. It's just accept, reject. So it's not fully underwritten. It would only be, there is a 12-month pre-X clause. So we don't cover pre-existing conditions for the first 12 months on these. So after 12 months, they would be covered, or they would no longer be excluded, let's say. And then it would pay based on the schedule of the plan at that point regardless of prior history. And they would have to qualify. So, you know, if they can, as long as they can answer no to the medical questions, they'd be able to get the policy. And citizenship's not an issue. We don't require a social security number. Our only requirement in that world is that the person resides legally in the U.S. for the duration of the plan. That's our only requirement. Again, the benefits are definitely leaner for plans 4 and 5, but if they have an MA plan, you know, this is just going to soften any kind of out of pocket that they have and make them happier with their overall package. And I didn't talk a lot about packaging today, but I'm a big believer in layering products, because there's no one size fits all product. There's no zero deductible, zero premium plan for, I mean, they're not out there, you know. So we have to get creative with our premium dollars. As agents, our job, I believe, is to guide the client to be most efficient with those premium dollars. I mean, what matters to you? Why are you buying insurance today? I used to ask those questions all the time and get really good answers. And it just tells you who you're talking to. What do they value? Why are you buying insurance today? If they say, you know, my price went up, you know, $5, I'm upset. I'm just shopping around. I mean, you can't always help people in that situation. But if a person says, hey, I just a lot of options, I'm confused. I'm concerned about hospitalizations. I don't want to get killed on the per day in the hospital. Well, maybe one of these plans could fit right in there and just solve that problem for them. You know, it opens the door to the conversation. But we do have a bonus program going on right now. This one is going from May through the end of the summer, through the end of August. And we have a per app bonus for underwritten and birthday anniversary business. So if you sell in Oregon, California, or Missouri, where they have birthday and anniversary rules, I know Idaho just implemented a birthday rule as well. We have a per app bonus. Once you sell 3 in a calendar month, you will get credit for every policy you've sold during that calendar month in the form of a per app bonus. So we're in the relatively early part, about midway through the month of May. So if you were to write 3 policies in the next couple of weeks, and they were underwritten policies, you'd get $600 as a per app bonus. And if you were to attach a dental, vision, hearing, not only would you get the 10% discount on the sale when you wrote it, and if you have the preferred rate, you get another 10% off, plus you get an extra $50. And this is paid directly to anyone who submits it. It's a writing agent bonus. And you can talk to Nancy or whomever is doing the contracting on the senior side. They'll help you get set up. You just reach out to them directly for that. But anyone who's appointed with us today almost is ready to sell. I mean, we have 1 appointment available. So if you're appointed with Stonehill and ready to go, you already have access to all the senior products and all the under 65 individual products as well. And that's what I have for you today.